NVIDIA stock has been dropping. It is down more than 15% since the start of 2025. Every time I analyzed the stock in the past, the result was the same. Great company, incredible products, insane growth, and a habit of crushing analyst expectations. At one point, NVIDIA even became the most valuable company in the world. But despite all that, every time I ran the numbers, NVIDIA always looked overvalued. Recently though, I took another look and noticed something interesting. Those sky-high 100+ PE ratios are gone. Now the stock is trading at around 40 PE. That is still a premium compared to the market. But for a high-growth company like NVIDIA, could this finally be justified? So in today's video, I'll dive into NVIDIA's financials, calculate its intrinsic value, and see if a company's valuation has finally reached my price targets. Let's get into it. So, as you can see, NVIDIA is currently trading at $117. And even though the stock had this rebound of around 10% in the last week, the stock is still down 15% year to date. The company has almost $3 trillion market cap. We can also see that their net debt is negative, which means that they have more cash on hand than debt. This metric is an amazing one. So why is this so good? Imagine you have a mortgage on a house for $200,000, you have a loan for a car for $20,000. In total, your debt is around $250,000. However, you also have more than $250,000 in your bank account. Basically, if something bad happens, you can pay down all your debts with no issue. Okay, now let's look at their valuation. When it comes to price to earnings, the company is trading at a 40 PE ratio, with an estimated around 26 forward PE. From the first glance, it might seem pricey. However, the company has great growth, so potentially this can be validated. I also like to look at the return on invested capital. And NVIDIA has a crazy 90% ROIC. What it means is that NVIDIA does an amazing job at investing their money, basically earning 90% annually on their investment. Imagine yourself getting a 90% annual return on your investments. It's crazy, right? Okay, so far no red flags. Now let's look at their detailed financials. Let's look at their revenue and see their growth. Since 2017, we managed to grow their revenue from $7 billion to 130. That's almost 20x. I mean, that's just crazy. Let's also look at their gross profit margin. What gross profit margin is their revenue minus cost of goods sold. And for NVIDIA, the numbers are great. I mean, in 2017, it was around 60%, and it kept growing, currently reaching around 75%. Imagine it like this. Let's say NVIDIA sells a chip for $1. What the 75% means is that the chip cost them only 25 cents to make it, and the 75 cents go to income before other expenses. Again, an amazing metric. Okay, now let's look at their net income and how it's growing. Another crazy metric, growing from 1.7 billion to 73 billion in just 8 years. Almost 40 times. Now, let's look at their shares outstanding. Let's see if a company is diluting their shareholders by issuing more shares to support its crazy growth. So it seems like there was some dilution as the shares were increasing, but not a lot compared to their growth. And over the past few years, they started to buy them back. Also, not a terrible metric. Finally, before we dive into analyst estimates, let's look at their free cash flow. Not surprisingly, NVIDIA experienced a growth of almost 40 times in just 8 years, growing from 1.5 billion to 60 billion in free cash flow. I mean, this is just amazing. Okay, now let's look at what analysts are predicting for the company in the near future. When it comes to NVIDIA's revenue, analysts expect the revenue to more than double in the next 5 years. They also expect growth of around 60% in this year. I keep repeating myself, but these numbers are crazy. For earnings, analysts also predict that NVIDIA's net income will more than double in the next 5 years. And for their free cash flow, analysts expect for it to more than triple in the next 5 years. Guys, I do not know what to tell you. On paper, NVIDIA's financials look simply amazing. The only thing left to do now is to check if their financials support their current valuation and if NVIDIA could be undervalued. For that, let's go to my intrinsic value calculator. So let's put in their earnings per share, which is currently $2.97. Regarding growth, I know we saw the estimates of 50% growth for this year, but we also saw it going down for the next year. I myself would like to stay more conservative and put their next 5-year growth for 20%. And for the next 5 years, let's say their growth slows down and they start growing at around 10% annually. Finally, for the multiple, I doubt that NVIDIA will trade at 40 PE in 10 years. I do think that their multiple will shrink, so let's say they trade at 20, which in my opinion is still fairly generous. As we can see, these assumptions are valid for the current price. It looks like for a 10% annual return, the stock might be undervalued. So, after reviewing NVIDIA, I have to say I'm surprised. The company's financials are outstanding. No debt, extreme growth, and surprisingly, a valuation that actually seems reasonable. This is the first time I looked at NVIDIA and thought, this might actually be a fair price. That said, I'm not pulling the trigger just yet. It's close, but I still would like to dig deeper before making a decision. I suggest you do the same and don't base your decisions solely on my insights. But I'm still interested to hear what you're doing. Are you buying now or waiting for a better entry point? Leave your comments down below. If you enjoyed the video, consider subscribing and clicking the like button, as it does help to grow my channel. And as always guys, thank you for watching and I hope to see you in the next one. Bye.